Welcome back to the Daily Nugget, Daily Property Insights. One topic, 20 minutes or less. Myself, Lawrence Lotze, and joined by Tom Rawson, a real estate advisor. And Tom, the question for you today is sort of the trend at the moment. You can see that there's more home buyers with less investors and developers at the moment in the current market. Can you talk me through that? And is that what you're seeing?
Yes, it is, mate. So we are conducting a lot of property transactions still at the moment. What we're seeing when we're tracking numbers through those open homes, auctions or offer processes is that the developers aren't there and investors are picky. So a lot of the developers were active over the last 24 months and they had more time on their hands then. Construction sites were shut down with various lockdowns, etc. So they got busy on TradeMe and the other likes of the other property portals. They had their teams all sitting at home too. You've got a draftsman sitting at home, you've got a quantity surveyor sitting at home. So they went and bought property over those past 2 years and have kind of fulfilled their pipeline as such. So we're seeing less and less developers out there. There's still developers, but we had a craze of developers buying, and that's definitely pulled back. What that means is we're focusing with marketing property, not so much on, you might have seen it throughout the last couple of years, like aerial views showing the services, red lines, green lines, manholes, etc. That's kind of irrelevant to a home buyer. Investors, the second part of that topic there, investors, they've been really active over the last 2 years too. A lot of rules came into the New Zealand property market, interest deductibility, which you've touched on through your previous nuggets, being one of them. So the investors exited the market if they were going to exit. They looked at their accounting position and they've sold down if they were selling down, or bought if they were buying to make use of the new rules. So we're seeing less investors. In saying that, we had a property yesterday that had a bunch of investors on it. It was quite a good property for an investor in terms of like 3 dwellings on one property. So they're being picky. They're still there, much like the developers are still there, but not in the droves that they were before. And so what we're seeing is home buyers, first home buyers upsizing, downsizing, moving into Auckland, moving out of Auckland, and everything in between. We're seeing that they're active now. They've got less competition from these developers and investors, and so they actually have a chance.
Yep, totally. And I'm guessing with the way, or with the switch and the movement is at the moment, I mean, yes, over the last couple of years, it's developers and investors was as chaotic. I mean, I was in the game in 2020 and got in there and got a few deals myself. But I'm guessing at the moment, the sellers have to be respectful as well that this shift is happening, because, in 2020, you put something on the market and the time to sell was days and, days or a couple of weeks, where now it could take a little bit longer. So there has to be that understanding of your people that's going to buy it are going to be more picky from investor or developer. So it is for the first time buyer. So you've got to be more respectful of what you present into them or how you want to sell it as well. Yeah,
mate, that's exactly right. So, you would have seen headlines all around like mixed housing, suburban zone, terraced apartment zone, all that kind of stuff appealed to a particular market. Now it's like beautiful street, amazing school zones, brick and tile make you smile. These kind of headlines will kind of come back. As we shift the focus and realize who the buyers are, or best buyers are. I mean, the best buyer at the moment is an emotional buyer who's buying for their family. So it's a tough one, because owners typically, for the last 2 years, haven't had to do much in terms of presentation. And the advice from a real estate agent would have been like, look, let's just chuck it on there. It's going to be a developer that's going to buy it. We'll take it to auction. It'll be sold in 3 weeks or less. Happy days. The reality is now you've got to make sure your first impression counts with your property, that the agent has changed to change, follow the change in the market. The strategy's changed, and that, you're accommodating everybody that's in it. So we might have had like 30 inquiries in the first week for a property, and it might be 2 or 3 now. So if you're not answering your phone as a real estate agent and you're missing those 2 or 3 calls, or not returning them, or turning up to show the property to the buyer after, say, they've finished work, and you're just going, oh no, come to the open home, mate, then you might miss that buyer. So you've got to work harder as an agent. And so, homeowners need to make sure that they're getting a hard working agent too. So yeah, it is about accommodating things. Sometimes it's accommodating finance conditions and things like that, which you may see auction results have shifted backwards from where they were. They're almost 100% throughout the last couple of years. Now they're above 50%, but they're not 100%. And so that can be accommodating conditional interest. And so sometimes owners need to just realise that, hey, look, we're not going to sell at auction on auction day, but the process has still worked, and that we've got a couple of conditional buyers, and we'll sign them up straight after the auction.
Yeah, totally. So true. One of the episodes was just recently released was about what happens if auctions gets passed in, and from the deals in that point of view. The last thing, Tom, I'll talk about this topic is just from myself thinking. I looked at a deal in 2020, place in Rotorua, hadn't been renovated in 20 years, so the person was living into it, and you can imagine the condition of that. And people were fighting over it. Talking about, and there wasn't major development or investment from a point of view. It was just a decent opportunity. And I couldn't imagine that opportunity really pushing through the market now because of how unattractive it would look on paper from how much development or renovations needed and everything else, and how it was marketed. It wouldn't look with all those nice sayings and everything and the opportunities out there. And that's the sort of stuff that's definitely changing the market at the moment.
Yeah, mate, agree. I was probably the same as you. My first house was a complete do-up. But I had the skill set to kind of add value, and I wasn't competing with others in that space. So you've got to think about it like that. If someone's, if you're selling a property and you haven't touched it for 20 years, and it might have been rented for those 20 years as well, so it'll be even in inferior condition generally. Someone that's buying it, they've got to think about getting a tradesman or someone to come and do the work. That's pretty hard. I mean, try and call a builder now and try and get them to do anything. It's impossible. So even organising a new kitchen sink or bathroom sink, I mean, you're waiting weeks for it. So it can be really hard. So, yeah, the advice has changed. And you've brought up a good point there where just making it livable is the bare minimum. Making it attractive now will be the new norm.
Yeah, awesome. Thanks so much, Tom. And as always, for anyone else that's listening to this episode at the moment, depending where you listen on audio, podcast, or video, if you have any questions for myself or Tom, please drop it in the comments below, and I'll make sure we'll come back with the best answers, as well as if you want any topics you want to cover, and we'll do another session to record that. And as always, thanks for coming over to the Daily Nugget, Daily Property Insights, one topic, 20 minutes or less. And as always, hope to see you